Brand new equity peaks today in the stock index portfolio today. One of the worst days in the stock market on the year. Incredible bull trap setup that we had going into the CPI. We'll go over that as well as the trade. So here are the results on the day. 50K portfolio plus 1,200. The 200K portfolio plus 5,700. Massive slippage, underperformance in both of these. 50K even more. We had a lot of slippage during the CPI, missed trades to rejected orders, and so that's part of trading a fast market sometimes, and we'll go over those. Up on the week and up on the month, so good trading day, week, and month right now on September the 13th. Let's look at this trade. Let's look at this bull trap setup, and I heard about this and I agreed. The market rallied into CPI anticipating a better than expected number, that inflation would be better than or at expectations, and it was worse than expectations. 8.3% versus an expected 8%. So inflation was higher than expected. The case for this rally back here is the Fed would pivot, that inflation is not as bad, and the Fed would ease their monetary policy, and the market pulled back and started to rally again with that same expectation, and we had CPI today. And it's given back all of the, nearly all of the Labor Day rally gains, post-Labor Day rally gains, and all in one day. And so big sell-off in the market. And our strategies did a good job of shorting this market. A lot of the trend was in the pre-market session, overnight session after CPI, so we didn't get the full move during the day, and most of our strategies are day trade. Let's go over the trades on the day. So we still have one short trade on the 60-minute breakout ES. Let's go over those first. 60-minute breakout ES, short right here, and the market is bouncing a little bit. So just one trade going on this setup. This was a good strategy for today. Unfortunately, we missed the first trade on this on the short side. The order was rejected by the exchange because of such a fast market. So this order was rejected, and we didn't take the trade. This was a great short. This entry price would have been good just to hold all day as the market sold off in a big way. Cobra 3 had a nice trade, hit its profit target, and momentum reversal. Let the market try to reverse a little bit here. It's always doing that, trying to reverse, but rolled over. So very symmetrical day. You see the big gap down created by the initial selling. Initially, the market was up, and then the CPI surprised and the market sold off, and then we had a sell-off at the open, the counter trend rally that normally looks like a prop, but then we had a continuation move that matched sort of the beginning move of the day. So very classical sell-off day, and the strategy did a good job taking these short trades on 60-minute breakout and on Cobra 3, and lost on momentum. So 2 for 3 in the S&P, even though we missed this first profit target right there on the S&P. Let's look at the Nasdaq strategies on the day. 60-minute breakout. Now this is one that really underperformed. And what happened here, this happened at the last CPI report, is that this came, the initial move was higher, and we came within 0.75 points of our profit target. The Nasdaq, the mini Nasdaq, traded 11 points higher, hit its profit target. The last CPI report, the micro traded 55 points lower, hit its stop loss, and the Nasdaq went up and hit its profit target. Today, the Nasdaq goes up, the minis, and hits its profit target, while the micro is 0.75 points away, rolls over, hits its stop. That's a $2,900 per E-mini difference alone. On top of that, we get anywhere from 60 to 130 points of slippage filled in different accounts, and so that was massive. That's about a $5,000 per E-mini difference, which comes out to about $2,000 on trading 4 micros in the 200K, and comes out to about $500 trading 1 micro in the 50K portfolio. So that was very disappointing and frustrating to experience such a fast market. That's what happens though. The bulls really ran this market up coming in to CPI, and so this shocking surprise CPI number caused this fast move down. We did end up benefiting from these moves later on in the day with these other strategies. Gap continuation 2019, nice trade into the close. Same at gap continuation 2022. Tick reversal, had 2 trades here. Tick Pulse had one loser and one winner, but up on the day the loss was smaller than the winner was bigger than the loser. So overlap NQ hit its profit target early on. Cobra 3 just stopped out on a small counter trend rally, small loss. Momentum reversal, tried to take the long side, stopped out. VTNQ is profitable, and then parabolic VSD NQ also captured the move here. I'm going to expand this so you can see it. Nice entry and exit on that strategy setup. And so we had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 strategies trade this today, and 1, 2, 3 of those strategies lost. So 7 out of 10 on the Nasdaq, mostly short strategies. 2 for 3 on the S&P. Good trading day, and once again we highly underperformed the hypotheticals because we base it on the E-minis, and the E-minis did better, hitting its profit target on 60-minute breakout, and then the massive slippage here, and then the missed trade here. That's 20 points. That's $1,000 per E-mini. And so we are at equity peaks, though. We did have good trading on the day. Would have been nice to be able to do a better job of implementing. It's hard to do a better job of implementing in that scenario, in that case. It's difficult. It's difficult to implement in such a fast market environment. And we initially want strategies that can, you see a gap down like this, and so oftentimes that's the whole move of the day. It was the gap, what had happened in the pre-market or in the overnight. And so you want strategies that can capture those moves. And so we do. We have 60-minute breakout short ES that can reverse the long, and then we have the 60-minute breakout long strategy. These two strategies are the only ones that trade overnight, and they were culprits today in slippage and rejected orders. But we wanted at least a couple of strategies to position us to take advantage of these moves that happen. We get a gap, and then oftentimes you get chop. And so those strategies didn't implement that well today, but we have them in there for a reason, and we may make adjustments. But the scenario with the Nasdaq, the mini overshooting to the profit target, and then last month the micro overshooting to the stop loss puts us in a worst case scenario for the micro both times. I've typically see mean reversion where next time the micro will do better than the mini or the same. So don't want to make too many quick adjustments based on a small sample size. Once again, those are the trades on the day for a massive sell-off in the market. It became a little bit faster, a little bit more disorderly at the end, and so it'll be interesting to see how the market trades that CPI going forward. Those June 16 lows, I think, are more in jeopardy now because the premise that the Fed would pivot is really not there, in my opinion. But the information flows and psychology can change by the day, so that's what makes a market. And so I'll be looking forward to trade tomorrow, going into tomorrow with these equity peaks from today.
Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.